Thanks a lot, and thanks for coming. My name is Ingo Hoffmeier. I'm the CFO of Lifezone Metals. In terms of background, Lifezone Metals is a hydromet technology company, but our trajectory changed significantly in 2019 when we acquired full control of the Kabanga nickel copper cobalt asset in Tanzania. We listed last year in July at the New York Stock Exchange. I think we were one of the few successful SPAC transactions in the mining space. We traded up significantly after our debut. We raised $70 million from a list of high-quality institutional investors, and so far our experience with an SEC-regulated environment has been excellent. In terms of the history before that, just a couple of words to Kabanga and the history before Lifezone acquired it. Kabanga was founded in the 1970s actually by a UN-led development program and then made its way through Sutton Resources to Glencore, who brought ultimately Falconbridge in the 1990s. So when we acquired the asset, we acquired almost $300 million of exploration funding and a full feasibility study that Glencore has been managing and releasing in 2014. The reason that this asset wasn't built earlier was twofold. After Glencore released its feasibility study in 2014, Glencore had to do a $2.5 billion rights issue in 2015. Even Glasenberg and four as his founders put almost $500 million of their own money back into Glencore, and greenfield developments were stopped. And the reason that ultimately Barrick approached us with the asset was that after John Magufuli revoked the licenses and slapped a massive tax bill on African Glencore, Glencore tried to solve the problem first for its existing gold assets, and the government wanted to find a partner who could do the beneficiation of the asset in the country. Glencore and Barrick's idea back then was to produce concentrate at Kabanga, ship it to Sudbury, and then on to Kristianstad to Nickelwerk to produce ultimately nickel cathode in Norway. So that changed. So Barrick approached us as a technology company to say, is your technology suitable to produce the material in the country? We looked at it and said, yes, this should work. And this is how, on the second point, the partnership with BHP came along. So after the acquisition, we brought BHP in, who currently owns 70% at the asset level. Glencore, very, very different story. Glencore has a significant metals recycling business in the US, especially in steel and copper, but doesn't currently have the capabilities in the PGM space. We have done almost a decade of batchwork testing of spent autocatalytic converters, and discussions with Glencore were going on in various areas. But we found them as a partner useful, and I think they were quite convinced about our technology. So it's a similar concept, but a very, very different refinery setup, of course, in terms of scale and size, etc. We have a laboratory in Perth where we have around 20 hydrometallurgists, processing engineers, chemical engineers. Currently, that lab is exclusively working for the first two, for point 2 and 3. So the Kabanga piloting is going on in our own facilities, and also the Glencore work is going on in our own facilities. We are currently not selling engineering services or any other technical services to external customers. Ivan Platz was the last revenue that we generated earlier this year, and that business will come back as well. In terms of our capital structure, we're currently well funded. So after we raised $70 million at the listing, we raised another $50 million via an unsecured convertible. Rick is one of our investors. It was led by Harry Lundin. It was in total 5 investors for $50 million. We started the negotiations during Indaba and announced the deal at the end of March. At the end of Q1, we had around $80 million in the bank, and that's more than sufficient to complete both of the feasibility studies for our partnership projects. So, Hydromet 101. So in our case, we're not talking about heap leaching. We're talking about pressure oxidation at different scales. The big advantages, of course, are that we have a significantly lower CO2 emissions compared to traditional and conventional smelting. That's number one. But for us, it was really the key to get into Tanzania because the beneficiation happens ultimately in the country. And as I mentioned before, in smelting, you have usually high, or you have to deal with relatively high CO2 emissions. You have very, very high energy consumption, obviously coming with that. You usually have also SO access or NO access. And as smelters are rarely being built, you have very, very long supply chains. So in our case, also in Kabanga's earlier case, before a nickel cathode would have been produced, the material would have traveled 27,000 kilometers in various non-refined shapes. In our case, we have a travel distance of around 300 kilometers before we ultimately produce a nickel cathode. So where are we currently? So the Kabanga deposit is the crown jewel in the East African nickel belt in terms of grade and in terms of size, and I think also in terms of understanding. It's a massive sulfate ore body, predominantly around 40% is in ultramafic. It's classic pentallatites, and chalcopyrite is the copper mineral in it. It floats in our case relatively easily, good recoveries. That testing is all done for the feasibility study. And then ultimately, this is the dot on the left side. The more central dot is where the Kahama refinery is going to be built. It's an interesting concept because Kahama is where the old Barrick Busmagi mine site is that Barrick had to shut down because the ore simply ran out. So you have a town with 250,000 people, an industrial base, there's an airstrip that Barrick obviously built, there's a big campsite, there's a town, there's water, there is power. So it's really from a mining investor perspective, a plug-and-play opportunity, which is great for us, but for the government, it solved a massive problem in the sense of a socio-economic problem with high unemployment coming up. So there was a tripartite agreement between Barrick, us, and the government to set aside a part of the facility, an industrial piece, not the mining liabilities, to stay back with Barrick, carve it out in a special economic zone, and this is where the refinery ultimately goes. The advantage of a special economic zone is that we are not going to pay income taxes for the first 10 years on the refinery profits, but also that we are exempt from import duties and import VAT, which is a big benefit when you build a capital-intensive operation. We were the second company in Tanzania after Barrick during the Magufuli period that signed a special mining license and a framework agreement with the government. And then the government, via that process, became a 16% shareholder. That's not a cheap arrangement economically, but it had significant benefits that I would like to speak to in the next couple of slides as well. In terms of grade size, etc., this is out of S&P, SNL, completely unchanged numbers. Everyone can replicate this. Kabanga is probably truly one of the largest and highest grade deposits currently undeveloped. It has seen a significant amount of exploration. We drilled since our ownership, or since we bought the asset in 2019, we started drilling and developing it in 2021 when we had the license. We drilled another 50,000 meters into it, but so far it has seen more than 640,000 meters of exploration, geotech, and of course, met testing drilling. Laser. So in terms of size, the development, so the discovery was on extreme left, actually in a lateritic ore body. Everything that you see here is massive sulfate. The main ore bodies that we will attack from underground mining, all open stoping, is the north zone and the Tembo zone, very different ore bodies. The Tembo zone is relatively slim with 15, 20 meters, but very, very clearly defined. And the north zone is much, much bulkier. Both of them will provide more than 20 years of mine life. In the north zone, of course, the grade is really what the outstanding part is. And very important in terms of the size, this is SK 1300 US regulation, so it's only the attributable part to us. So BHP stake and the government stake being taken out of it. But you can really see the outstanding grades that you have really on volume. Now the ore body is defined over 6 kilometers and ends at the end of the temple zone. Extrata still drilled 4 holes into the Safari zone, and we had very weak EM because there's a quartz shield on top of it. So we drilled more by experience. We had 11 holes and we hit 7 times in the Safari link zone the ore body, and it was usually around 2% nickel plus byproducts. In terms of the relationship, it's 8 times value-wise nickel and 1 times copper and 1 times cobalt. So it's economic from a concentrate, but also from an ultimate processing perspective. Currently going through the feasibility study, clearly if you take the byproducts out, you end up on a relatively low position on the cost curve. Similarly, because it's hydromet, also a low position on CO2. I just would jump forward to explain a rather innovative arrangement that we have with BHP. So BHP owns 1.5% at the LISCO, but the real investment of 90 million went into Kabanga. And Kabanga Nickel, the company, is a UK incorporated company. There's a bilateral investment agreement between Tanzania and the UK. There's a framework agreement that covers all of this over the life of the mine. And the licenses, of course, for the refinery, which has been issued, as well as for the mine down at Tembo Nickel Company, which is our operating entity that holds 200 square kilometers of special mining license and then 5 exploration licenses along strike. We are currently not drilling, so we stopped drilling in September. We issued our latest mineral resource update in November, and all this data is now being fed through the feasibility study that we expect to complete at the end of Q3. We're around 85% done with all the engineering. BHP has an option to get to 60%, that means 50% on a look-through basis on Tembo Nickel. And that option is done at an 0.7 times NEF. The NEF is the study NEF. So the arrangement with BHP is we have a steering committee, there's people seconded into the organization. There's hardly ever a time when there's no one from BHP on site. I think also our Tanzanian team is extremely competent. Quite a lot of colleagues are ex-Barrick, have built and run significant operations in Tanzania. The study ultimately is the basis for the valuation. There shouldn't be anything in the study that BHP finds surprising. All the trade-off studies, everything is run through the steering committee. The price in the valuation, so the commodity prices, is already predefined. It's a set of long-term commodity prices from a set of banks. And the discount rate is set by experts. So from that perspective, it's really on autopilot. And there's probably a time period of 4 to 6 months from when we deliver the feasibility study until when BHP has to make this decision. It's 3 distinct pieces. First, BHP needs to run the study through their own peer review. It's the DFS acceptance period. Then there's a valuation period, and then they have an option exercise period. In terms of a little bit more, I mentioned the positive relationship we have with the government of Tanzania. Yes, they own 16%, but we got a lot of mileage out of that relationship so far. So government has delivered us power to site, which was always one of the big constraints at the site. That came in the first quarter of this year. They're doing a road upgrade. The whole relocation plan was signed off by the government last June. We are through these payments now so that we can start issuing notices to vacate and start early works. We have the licenses in place. And just, generally, whenever we needed something from the government, they were very approachable and forthcoming with our requests. This were just the latest ticks with regards to the with regards to the permitting process. So the refining license was now received in March. The special economic zone is now in place. The environmental impact assessment certificates are also received. So there's only very small gaps that are missing and nothing that concerns us with regards to the permitting. We're doing also an IFC performance standard uplift on all the issues required, which will be done before the decision to construct. In terms of the US recycling business with Glencore, so that's a very, very different operation. You buy, in this case, material that has up to 2,000 grams of PGM. So the margins, obviously, because you have to pay at a discount, but you still pay for the metal, you end up building relatively small modular businesses around 20 million plus in an industrial site in the US. Glencore has currently 6% of that entity, and with their investment we funded the feasibility study, and then Glencore funds 50% for 20% stake in the business. We have a royalty in the Kabanga refinery as well as here for the technology development, and Glencore will on-lend money to us with regards to the funding of the working capital, which is quite important. Quickly jump forward in terms of what you can expect. Offtake is currently a big process that we run through. There's no guarantee that BHP invests, but our base case is they will. So we have 40% of the Kabanga offtake, they have 60%. We're currently running through an offtake process for that. The feasibility study, as I mentioned, is expected in Q3. Similarly, then after that, 4 to 6 months, the BHP investment, a possibility. And with Glencore, also in the second half of this year, the feasibility study for the AutoCADs, and then relatively shortly after that, an investment decision on a site in the US. Thank you very much.